If you're trading, you've probably wondered at least once, should I trade my own money or should I go with a prop firm account? The choice you make here could be the difference between struggling for years or scaling up fast in 2025. In this video, I'll break down the pros and the cons of both of these options in order for you to take the best decision. And not only this, I'll also go over the risks that most traders overlook and which path actually gives you the best chance at success. Let's get into it. First things first, what is a prop firm account? A prop firm account is an account that you will be able to trade after you buy a prop firm challenge at your prop firm of choice. After you get a prop firm challenge, you will then receive a demo account that you will need to trade in order to prove your skills as a trader. In order to get funded, you need to pass this demo challenge. How can you pass it? You need to pass it by reaching the targets they have set for you. Not only this, they have some very specific rules that you need to be aware of and follow, because otherwise you won't be able to get funded. Say you pass the account, you reach the targets, then you will receive the prop firm funded account that you will then trade, and that's how you will be able to make real money. On the prop firm funded account, you will be able to withdraw up to 90% of the profits, depending on, of course, the prop firm. Some prop firms have a 50% profit split, some have a 70, some have an 80, some have even a 90% profit split, okay? Now, on the other hand, we have the personal account. For the personal account, it's very simple. You basically deposit your own personal money and you trade it however you want it, okay? You don't have any rules, you don't have any targets, you don't have any demo challenges, you just deposit the money and you start trading it however you want it. Besides this, you can also withdraw basically whenever you want, as opposed to a prop firm account where you will have to wait a minimum of trading days before being able to withdraw on a funded account. Now that we briefly discussed about each of these two options, it's time for me to go over the pros and the cons. And I will start with the prop firm account. A major pro when it comes to a prop firm account is the scalability. You see, with the right skill set, with the right trading plan and trading strategy, you will be able to scale up to 6 or even 7 figures in a matter of months. Whereas with a personal account, I doubt that you can do that as fast, especially if you don't have a lot of capital sitting on the side. Not only this, but with prop firms, the barrier to entry is relatively low, in my opinion. Because for example, with $500, you will be able to get a 100K challenge with most prop firms. And then once again, with the right skill set, you will be able to pass it and then have a 6-figure funding. Whereas if you will trade a $500 personal account, I don't think you will have as much potential. When trading a prop firm account, there will also be less emotional pressure, because even on the funded account, you know that you aren't trading your own personal funds, which can ultimately result in a lot less stress. Worst case scenario, you breach the rules and all you've lost is essentially the prop firm challenge fee that you paid for in the beginning. And say you paid for that challenge fee, you got the funded account, you were also able to get out a payout, you basically didn't lose anything. If anything, you were still on the positive side. You will also be able to have access to large amounts of profits if, once again, you have a good trading skill set. Say you get funded, right? Say you then scale up to 6 or 7 figures worth of funding. On a 7-figure funded account, 2% on a $1 million account means $20,000. Out of that $20,000, let's say you have a 50% profit split, which is on the very low end, you will have $10,000 as a payout. So you can see how scalable prop firms are if, of course, like I said, you have the right trading skill set. And that right there should be your initial goal before asking yourself whether you should go for a prop firm or personal account. Because without a proven strategy, a proven trading plan and risk management plan, you won't be profitable on a prop firm account and neither on a personal account. So that right there should be your main initial goal. Now, in terms of the cons of the prop firm account, you need to understand that they have strict rules and restrictions that you need to follow. Because if you won't, you will ultimately breach the account and then you will have to restart the whole process. You will have to get the challenge account, try to pass it and get funded. And then on the funded account, once again, if you breach these rules, you will have to restart the whole process. So this right here, I would say, is a con because you don't have full freedom, meaning that you have to stay within the rules, whereas on a personal account, you can trade however you want, you can risk whatever you want per trade, and you can also trade during news, whereas on some prop firm accounts, they don't allow news trading, and so on and so forth. Second con would be the profit split. As mentioned before, you won't be able to withdraw 100% of the profits you make. You will be able to withdraw up to 90% of the profits in the best case scenario. Whereas on a personal account, whatever you profit, you will be able to withdraw. You also need to understand that evaluations aren't easy, okay? It's not easy to pass the challenge and get funded. It can take time, it can take weeks, it can even take months, it can even take blown prop firm accounts before you get funded the first time. So this is also something that you need to understand. These prop firms make the most money from the people that get the challenge and don't pass it. You can check the statistics and see that around 90% of people that go for a prop firm challenge fail it. So don't go buy a prop firm and think that it's going to be a very easy challenge for you, because trust me, it won't be. And the last con I can think of is that in the prop firm space, there are also some shady firms that will do whatever it takes to not let you get to the funded account, or if you get to the funded account, they will try to prevent you from getting to that payout. So this is also something that you need to be careful of when choosing the prop firm that you will go for. Now, let's talk about the personal account. Firstly, I'm gonna mention the pros, and I think it's pretty self-explanatory here. On a personal account, you have full control over everything. Basically, from the time you deposit the amount to the time you withdraw it, you can do whatever you want. You can trade during news, you can hold overnight, you can hold over the weekends, okay? You can trade whatever strategy you want. You can use whatever risk management you want. You basically have zero limitations, okay? So this right here is a huge pro when it comes to personal accounts, that you can deposit the money, trade however you want, whenever you want, and also withdraw the money, withdraw the profits whenever you want. Basically, you have full control. You also own 100% of the profits you make, and you don't have any restrictions, any targets, and any drawdown rules. So I would say that these right here are the big pros of trading a personal account. But now, in terms of the cons, you need to understand that trading a personal account is a lot more stressful than trading a prop firm account. Why? Because it's your own personal money. And because of that, the pressure will also be higher than when trading a prop firm account, where you know that the worst thing that can happen is you breaching the account and losing the initial fee that you paid for the prop firm challenge. Not only this, when trading a personal account, you need to have a significant capital, in my opinion, because trading with $500 won't change your life. So a con is that in order to trade a personal account and trade it profitably and consistently and see growth, okay, is the amount of capital you will be able to trade. And not only this, but scaling also takes time, as opposed to a prop firm account where, like I said, if you have the right skill set, you will be able to scale relatively quickly. On a personal account, even if you have the right skill set, but you don't have a huge capital, you won't be able to scale as quick. Before I'll help you decide which option is the most suitable one for yourself, I also want to talk about some risks that most traders overlook. I see so many traders get into a prop firm challenge thinking that it's going to be very easy for them to pass it, get funded, and then get that 5-figure payout. And that right there is very far from the reality. Not only this, they also think that they can pass a challenge by having a bad risk management, bad trading plan, and not having a proven strategy. And the time they will realize this, it might be too late. Another one is aiming for home runs. I see so many traders that go for a prop firm challenge, they pass it, they get funded, and then they aim to make a 10% month or a 15% month to get a huge payout. That right there is very wrong to do, and that's exactly what I always stress about in my community with the people that join my mentoring and learn from me. After they learn from me and they then go for a prop firm account because they're ready for it, I always tell them to aim for less. Basically, go for 2% months, go for 3% months, rather than trying to swing for the fences and go for that 10 or 15%. Okay, I'm not saying that that is not achievable, but it's a lot riskier, because you see, in order to have a 10% month on a prop firm account, you need to risk a lot more, whereas having 2 or 3% months means that you can risk less, you can also be more conservative, you will have less stress, and you will also be able to keep the account for a longer period of time. And the people that are able to learn my strategy and then implement this exact thing, and they don't try to go for home runs, they then are able to achieve results like this, or like this, or like this, or like these. And on that note, if you would like to learn from me and work with me one-on-one and then also trade with me, click the first link down below and apply for my mentoring program. And the last risk that I want to mention is shady prop firm. When you're ready to get your first prop firm account, be very careful when you choose which prop firm you're going to trade with. Make your research, look for reviews, look for social proof, okay? Don't go for a prop firm only because it has a very good and attractive price. It's a lot better to do your own diligence, make a good research, make a deep research, okay? See the conditions, see the prices, see the reviews, see the social proof, see if they have payouts before jumping on board and starting with that specific prop firm. Because like I said, nowadays there's many shady prop firms that would do whatever it takes in order for you to not get that funded account or not get that payout. And now I want to help you decide which path you should go for. First and foremost, like I said, you need to have a good trading skill set. You need to have a proven strategy. You need to know that you're already a profitable trader. If you have that, it's good. If you don't have that yet, like I said, make sure to have that as a priority. Get a mentor. It doesn't necessarily have to be me. If you like me, then of course it can be. If not, then you can choose someone else that you need to learn from. Learn that proven strategy, that proven trading plan, and now it's time for you to decide whether you will take the prop firm route or whether you will trade your own personal account. Now, it's pretty simple. Ask yourself this: do I have a large capital sitting on the side that I would be able to trade with without having to stress about it, okay? Meaning that it's not the money that you depend on a day-to-day basis or money that you need for paying the bills. Because like I said, trading with money that you need is the worst mistake you can make, because you will have a huge pressure on your shoulders, and trading under pressure is a no-go. If the answer to that is yes, and you have a large amount of capital sitting on the side that you will be able to trade with and not feel at risk, then in my opinion, you could definitely go for the personal account route, okay? Because you will be able to trade your personal funds, you will have full control when it comes to your withdrawals, to the way you trade, to the risk management, to all that, and ultimately you will have more freedom, so to say, when trading your own personal account. However, if you don't have a lot of money sitting on the side, which I would say is probably the case of 90% of people, and that was my case as well, I would definitely 100% recommend you going for the prop firm route, okay? If say you only have $100, $500, $1,000, $2,000, $3,000, even $5,000 in my opinion on the side to trade with, I would still go for a prop firm account. Because say you are trading a $5,000 account, okay? Even if let's say you aim to make 20% a month with a pretty increased risk per trade, that's $1,000 a month. Whereas if you would go for a 200K account that costs around $1,000, you are able to pass that account, get funded, and aim for that 2% payout. That's gonna be $4,000 with a 70% profit split. That's gonna be around $3,000 that will go in your pocket. So you can see how with an investment of $1,000, you will make more than trading your own $5,000 personal account. So in this case, like I said, I would definitely recommend going for the prop firm route, instead trying to trade your own funds, because trust me, it is way harder to scale up with a small account instead of trying to scale up gradually with a good risk by trading prop firm accounts. So yeah, I hope this helps you decide which of these two options is the suitable one for you. And I also want you guys to let me know down below which of these two options you prefer and which of these two options you are currently on. Are you trading a prop firm account or are you trading a personal account, and also why? Let me know down below and I'll make sure to check it out. At the end of the day, this right here is just my personal opinion, and it also comes down to your personal preference. This is not financial advice, and you should definitely do your own research. And what you need to understand is that there's successful traders that trade a personal account, there's successful traders that trade prop firms only, there's successful traders that trade both. At the end of the day, you need to choose whatever option is the most suitable one to you and then stick with it, apply proper risk, and keep it simple. And on that note, I really hope you guys found this video valuable. If you did, drop a like, share it, subscribe to not miss out on any future uploads. Let me know down below if you have any future video ideas. Until the next one, if you want to see a cool video where I basically did a challenge, I day traded in my car for a full day to see how much money I can make sure to click this video right here. And lastly, I want to wish you guys all the best and take care.